All right, ready to dive deep into how to keep more of your money when you sell your home.
Oh, yeah.
We're talking about saving on taxes, maybe thousands, maybe even tens of thousands.
No one wants to hand over extra cash to the IRS.
And so many people unknowingly overpay.
Right. They just don't know the rules.
Exactly. So we found this article by the Sloth Financial Group,
Those guys know their stuff.
and it's all about how to, legally, of course, avoid paying taxes on home sales. Our mission today, to help you calculate your gains accurately so you can minimize what you owe.
Sounds good to me.
So first things first, let's just bust a myth right out of the gate. A lot of people think, hey, if I sell my house, all I got to do is take the sale price, subtract what I paid for it, and boom, that's my profit.
Oh, if only it were that simple.
Right.
But the IRS has a whole different way of looking at things.
Now, what's the real deal? How do they calculate that taxable gain?
Okay, so they have this formula. It starts with, the selling price, straightforward enough.
Got it.
But then you subtract all your selling expenses, like think realtor fees, closing costs, anything directly tied to the sale.
Mm-hmm.
And that gives you what they call your amount realized.
Amount realized.
Oh.
Okay. Writing this down.
From there, it gets a little more interesting. You take that amount realized and you subtract your adjusted basis.
Okay, now I'm guessing this adjusted basis is where the magic happens.
You got it. Adjusted basis, that's your total investment in the property. And here's the key. The higher that number, the lower your taxable gain, which, you guessed it, means less money going to Uncle Sam.
Okay, so how do we pump up this adjusted basis? Lay it on me.
All right, so it all starts with your original purchase price. Plus, you add in all those lovely fees that come with buying a house.
Oh, you mean like all the legal stuff, title searches, recording fees,
Yeah.
fun times?
Yep, all that. Plus, any seller-paid costs you had to cover, things like back taxes or leftover mortgage interest from the previous owner.
Okay, makes sense. But there's got to be more, right? There's got to be a way to really get that adjusted basis up there.
You are reading my mind. And this is where it gets exciting: home improvements.
Home improvements. Oh, I was hoping you'd say that. So we're not just talking like major renovations, right?
No.
What kind of things are we talking about here?
We're talking about a whole range of upgrades. Think additions, like adding a bedroom, a bathroom, that fancy new deck you've always wanted.
Oh, or like a garage for the dream car.
Exactly. Anything that adds square footage adds value. Then there's all the exterior stuff, new siding, a solid roof that won't leak, storm windows to keep those energy bills down.
Smart. So basically, if you could do exterior work, think strategically, could help you out at tax time.
You got it. And then don't forget those maybe less glamorous but super important upgrades. Insulation to keep things cozy in the winter. Plumbing upgrades so you don't have any surprises.
Yeah, been there, done that.
Even a new sprinkler system keeps the lawn looking nice and green.
Wow, so many things. It's amazing what can actually count towards your adjusted basis.
You know, it actually reminds me, years ago, I replaced all the windows in my old house. They were so drafty, costing a fortune in heating, I thought, why not upgrade? Turns out, that would have been a gold mine when I sold.
Yeah, I bet. So many homeowners miss out on these deductions.
Well, if only I'd known then what I know now.
Live and learn. And that's exactly why we're talking about it. People are spending money on improvements anyway. Might as well know how to make it work for you at tax time.
Exactly.
That's all perfectly legal.
Right. It's like finding hidden treasure in your own home.
The IRS actually wants you to claim these deductions.
Well, that's good to know.
They lay out the rules. It's up to us to understand them, right?
Okay, I'm feeling empowered. But before we get too carried away, are there any kind of gotchas, things people think are improvements, but actually the IRS says, nope?
Definitely.
Yeah.
There are a few tricky areas to watch out for.
All right, what are they?
Think about those routine maintenance tasks that everyone loves to hate. Oh, like repainting, fixing leaky faucets, patching drywall, all the fun stuff.
Yep. Essential for keeping your home in good shape.
Hmm.
But in the eyes of the IRS, they don't really add value or extend the life of your home.
So those little weekend warrior projects.
Yeah.
Not as tax savvy as you might hope.
Right. Important, but not really moving the needle on your adjusted basis. Same goes for those trendy short-lived upgrades, that bold paint color that's in style right now. Or those easy-to-replace light fixtures. The IRS is looking for those lasting upgrades that really impact the value.
Gotcha. Okay, so renovations, big upgrades, that's good. Regular maintenance, quick fixes, not so much. But hold on, how do we prove all these glorious improvements to the IRS? I can't imagine they just take our word for it.
Oh, you are so right. This is where record keeping is key. Every receipt, invoice, every contract, they're like puzzle pieces all building your case.
So we're talking like a shoebox overflowing with receipts.
Well, maybe a well-organized file folder would be a little better.
Right.
But yeah, you got to be able to back up your claims. The burden of proof, it's on you.
Okay, this is a little daunting. What if we're not really sure what qualifies or how to do all these calculations correctly?
That's a great question. And it leads us to a really important point. The value of getting advice from a pro. Talking to a tax person, someone who specializes in real estate, or maybe a financial advisor, that can be a game changer.
So it's like having a Sherpa guide us through the tax code jumble.
Exactly. These professionals, they live and breathe this stuff. They can help you figure out all the complexities, make sure you're claiming everything correctly, and just really make sure you're paying the absolute least amount of taxes.
I'm sensing a theme here. Knowledge is power. The more we understand the rules, the more we can protect our hard-earned equity.
Absolutely. And you know, the author of this article, he's actually a financial advisor.
Oh, right.
He sees this all the time. Someone like that can give you really personalized advice.
That's good to know. So even if we think we've got a handle on things, a second opinion never hurts.
Never hurts. Peace of mind is worth it.
I like that. Peace of mind. All right, so we've busted the myth about those simple calculations. We've got the real IRS formula down. And we've explored the amazing world of adjusted basis and the power of home improvements.
And don't forget record keeping.
Right, right. Document everything. But before we move on to even more strategies,
Oh yeah, there's more.
I want to leave you with a question. How might what we've learned about this adjusted basis and home improvements, how might that change how you approach your next renovation project?
Ooh, good question.
Yeah, something to think about.
Definitely. Welcome back. Ready for round 2.
Bring it on. We're ready to unlock even more tax savings.
Perfect, because we're about to dive into some, honestly, ingenious strategies to make those home improvements really work hard for you when it's tax time.
Oh, there's more. All right, tell me everything.
There's always more. Remember those repairs we talked about earlier? The ones that don't usually count as improvements for tax purposes?
Yeah, like fixing a leaky faucet or patching up holes in the wall. I figured those were just part of home ownership. No tax breaks there.
Well, here's where things get a little interesting. This Skloff article, it highlights this kind of little-known loophole, repairs. But here's the catch. Repairs made as part of a bigger renovation project, those can actually count toward your adjusted basis.
Wait, seriously. So if I'm already replacing like all the windows in my house and one of them happens to be broken, fixing that broken one suddenly becomes deductible.
Exactly. It's all about context. When you're doing a major renovation, those smaller repairs, they become part of the overall improvement. They're contributing to the increased value of your home.
That is so clever. I never would have thought of that. So those little fixes, they can really add up when it comes to tax savings.
That's why we do these deep dives. Uncovering those hidden gems, the stuff that can really make a difference.
I love it. It's like finding a $20 bill in your pocket. Speaking of which, the article also mentioned something about energy-efficient upgrades being potential tax savers.
You got it. The government loves to incentivize those eco-friendly choices.
Of course, yeah.
And home improvements are no exception. Things like solar panels, energy-efficient windows and doors, even a high-efficiency HVAC system. Those can all potentially qualify for tax credits or deductions.
So we're saving the planet and saving money on our taxes. Sign me up.
Exactly. It's a win-win. And it goes beyond just the energy stuff, too. Accessibility upgrades. Things like ramps, wider doorways, grab bars in the bathroom. Those can qualify for certain tax benefits, too.
Wow, the possibilities are endless. But I gotta say, with all these different categories and rules, it can be a little overwhelming to keep track of everything. Where do we even begin?
Well, that's where those meticulous records come in.
Right, the receipts.
Every single receipt, invoice, contract, it's all evidence.
Okay, so we need to be like super organized, document everything. Any tips for actually staying on top of all that? Because those shoeboxes full of receipts, not the most efficient system.
Definitely not. I highly recommend set up a dedicated file folder, either physical or digital, specifically for all your home improvement expenses. Organize everything by category, like windows, roof, HVAC, that kind of thing. And make sure you have detailed notes, dates, contractors, all those important details.
So basically, be proactive and organized. The better our system, the less stressful tax time will be. And of course, if we're feeling totally lost, reach out to a professional, right?
Always a good idea. They can be lifesavers when it comes to this stuff, helping you identify everything you can deduct, making sure you're doing it right, and ultimately saving you a lot of money.
It's amazing how this knowledge can actually change how you think about home improvement projects.
Yeah.
Instead of just seeing them as expenses, you start thinking about them as strategic investments,
Totally.
something that improves your space and might have tax benefits later on.
It's like a whole new perspective.
Right. Maybe that kitchen remodel doesn't sound so bad now, especially if it could mean a lower tax bill when it's time to sell.
Exactly. Now, what if you're not planning on selling anytime soon? Should you still be keeping track of all those expenses?
That's a good question. It's easy to think, oh, I'm not selling for years. I don't need to worry about that now. But maybe that's not the best approach.
Here's the thing. Life, it throws curveballs, right? You might have to relocate unexpectedly, your circumstances could change, and suddenly you're selling sooner than you thought.
And wouldn't it be terrible to miss out on all those potential deductions just because you didn't keep good records?
Exactly. It's always better to be prepared. Think of it as building this financial safety net, one receipt at a time.
Ah, I love that. Building a safety net. Creating a treasure map to tax savings.
Speaking of treasure maps, this deep dive, we've definitely uncovered some hidden gems when it comes to minimizing those taxes on your home sale.
We really have.
But there's one more really crucial aspect we need to talk about.
All right, I'm ready. Hit me with it.
We need to talk about tax laws. They change. The rules we're talking about today, they might not be the same in 5, 10 years.
That's true. It can feel like a moving target. So how do we stay ahead of the game?
The key is to stay informed. Be proactive. Subscribe to those financial publications you trust. Follow tax experts online. Maybe attend some seminars or workshops. Stay up to date on the latest changes.
So continuous learning is key.
It's Jack.
Got to keep up with the times.
Exactly. The more you know, the better equipped you'll be to make those smart decisions.
This has been so insightful. We've gone from feeling totally intimidated by taxes to actually feeling empowered and knowledgeable.
That's the goal.
We've learned how to strategically approach home improvements, uncovered all these hidden tax benefits, and realized just how important it is to keep good records and maybe even talk to a professional.
And we've learned that minimizing taxes on your home sale, it's not about tricks or loopholes. It's about understanding the rules, playing by them, and using every strategy available to your advantage.
It's like we've unlocked this secret level of financial literacy. We've got the knowledge and the tools to make smart decisions and save money.
And who knows, maybe you'll feel inspired to finally tackle those home improvement projects you've been putting off, knowing that they could not only make your home better, but also maybe lead to a lower tax bill later on.
So to everyone listening, remember, knowledge is power, especially when it comes to your money.
Couldn't agree more.
Don't be afraid to dive deep, ask questions, and reach out to experts if you need help. The more you learn, the more you can save.
Absolutely.
And remember, keep those receipts. You never know when they might come in handy.
They are your secret weapon.
It really is amazing how keeping receipts can suddenly become like the most exciting part of homeownership.
Right.
Who knew those little pieces of paper could be so valuable?
They're like little trophies. Proof of your smart decisions.
Exactly. Tiny victories in the battle against taxes.
Yeah.
But speaking of battles, let's talk about the big one, actually selling your home. We've covered so much about boosting that adjusted basis, but what happens when we actually reach the finish line? Time to file those taxes.
That's when all that hard work, all that record keeping, it really pays off.
Okay, so walk me through it.
All right, so when you file your taxes, you'll use this form, IRS form 8949.
8949, got it.
It's called Sales and Other Dispositions of Capital Assets. That's where you report the sale of your house. And this is the key part. That's where you list all those awesome improvements and how much they cost. It's all about showcasing that increase in your adjusted basis.
So it's like we're presenting our case to the IRS, all our evidence, look how much we've increased the value.
Exactly. The more evidence you have, the smoother the process is going to be.
Okay, so we've documented everything, filed the right forms, and then we just sit back and wait for that tax refund.
Well, almost. There are actually some exemptions and exclusions that can reduce what you owe even more.
Oh, tell me more.
So, for instance, if you've lived in your home for at least 2 of the 5 years before you sell it, you can exclude up to $250,000 of capital gains from your income.
Wow.
And if you're married, filing jointly, that exclusion doubles, $500,000.
Wait, are you serious? So you could actually make a good profit on your home sale and not owe any taxes at all?
It's true. There are some conditions, of course, but for a lot of people, this exclusion is huge.
It really is amazing what you can save when you know the rules.
That's what we've been saying.
This has been such an eye-opening experience.
It has.
We've learned how to approach those home improvement projects strategically, uncovered all these tax benefits, and realized, it's worth it to keep those records organized.
Yeah.
And maybe even talk to an expert.
Couldn't agree more.
Minimizing those taxes on your home sale, it's not about tricks. It's about understanding the rules and making them work for you.
Exactly.
It's been like unlocking this secret level of financial understanding.
I like that.
And maybe, just maybe, this will inspire you to finally tackle some of those projects you've been putting off, knowing they could not only improve your home, but maybe even lower your tax bill in the future. So, everyone listening, remember, knowledge is power, especially when it comes to your money. Don't be afraid to ask questions, do your research, and reach out to experts if you need help. The more you learn, the more you save.
So true. And keep those receipts organized.
Always. You never know when they might come in handy. Well, that wraps up our deep dive on minimizing taxes when you sell your home. We hope you enjoyed it, learned a lot, and maybe even feel a little more confident about tackling your next home improvement project.